Welcome to Macro Insight. This is my weekly call where I take you through my thoughts on all of the different asset classes out there, which trades I'm looking at, what the main market drivers are and narratives, and how I'm risk managing my positions. If you haven't already signed up to your free 1-week trial, please visit the website link in the description to this video, and that will give you access to the live call with me, and that takes place on Tuesdays at 2 p.m. London time. Hopefully I'll see you there next week. Last week, obviously, I had been predicting a correction, saying that the market felt a bit overstretched, a bit priced for perfection, and that started to materialize last week. So, if we look, when was it? Last Thursday, we hit an intraday kind of high of 37.15, all-time high there, and then we've come off, sold off down to lows of around 36.30, and then we've obviously staged a bit of a bounce off that. So generally, the kind of correction I was looking for, I've put some lines on the chart here. Probably the minimum correction, was around this 36.50 area. Generally the sort of shape that they often take is a ABC kind of formation. Arguably, we've seen that we've had a bounce, and we are in the process of the C. And even that C within itself can have various wave forms. So, even though we're bouncing a bit today, I don't think it's out of the question that towards the end of this week, or maybe even early next week, we get the final push down that completes this correction, right? So that's what I'm kind of looking at the moment. What would kind of negate that view? If we broke above this level here, above this kind of, basically if we took out 3,700 in a hurry into the end of this week, then that may well mean the correction's done what it needs to do, and we may have a fresh attack of the highs into the illiquid Christmas period. Okay, so that's kind of what I'm watching on the S&P right now. In terms of, the correction, it has begun. It hasn't been overly sinister, and it does seem to keep wanting to bounce quite quickly, right? So we can think about, why that might be the case and what's going on in the broader market. So obviously you've got the vaccine distribution has begun in the UK and in the US. FDA approval was granted, and so people have started being vaccinated in the US as well. You've got, what else have you got going on? Obviously, US stimulus is expected to kind of get done. There's like a $908 billion relief package that they're trying to agree on at the moment. The market, I suspect, is expecting that to go through before the year's out. If they don't manage to, then that could be at the margin a bit of a disappointment. But for now, I think that's kind of helping support the market and stop it from really, falling out of bed. Despite the fact that, on the ground, coronavirus numbers are still exploding, and more lockdowns are being introduced in the US and across the globe, right? The UK have just gone back into tier 3 for London, starting midnight tonight. You've also got Germany and Italy saying that they're going to be in lockdown until the 10th of January. So Christmas is a bit of a disaster, but the market's already factored that in and was already pricing that in. So it's not, you can't necessarily expect the market to suddenly sell off on that news, because that was expected. So it seems that the market's pricing, yes, Christmas is a nightmare. You're going to get a dent in GDP, but we've got vaccines being delivered. We've got a stimulus package of some kind happening in the US, and these things are generally supporting the market, okay, for now. Another thing that I think is supporting the market is slightly more technical, is that we're going into December expiry for options expiry, right? Or triple witching expiry, because it includes the futures as well, right? And what often happens going into one of these big quarterly expiries, especially if the market has been kind of drifting higher, is that the market gets caught in a place where there's a lot of gamma out there, okay? So for those of you who've done my options course, understand what gamma is. A lot of the dealer community, whether it's market makers or investment banks who trade options against clients, they are all sitting there long optionality that expires on Friday. okay, this week. And around that 3650 to 3700 area, it seems there's quite a lot of option open interest there. Yeah. So these guys are getting long a lot of gamma that's expiring in a few days. And what that gamma kind of makes them do is when the market goes up, they have to sell futures. And when it goes down, they have to buy futures. So it just kind of makes the market gravitate around these big strikes that they're all long. Yeah. And this is called a pinning effect. Yes, you might have heard that term, pin risk, or the market is pinned. So what often happens is into an expiry, the market gets pinned. It kind of struggles to move away from these big strike areas that we have, whether it's 3650, 3675, 3700, this kind of area. Once those options expire, which is, some expire on the open on Friday, some expire on the close, like the ETF options that expire on the close on Friday. But basically after Friday and all those options have gone away, the dealers' books are a lot lighter. The dealers don't have as much gamma. And so what that can mean is the market is freed up to move or go to where it wants to go, basically, right? Because you don't have this artificial demand for futures that comes as the market sells off, basically. So if there is a reason for this correction to continue, and the market does get spooked, whether it's a no-deal Brexit or whether it's, stimulus not getting passed or a really bad outcome in terms of viruses and hospitalizations, things like that, the market's kind of struggling to break down in the face of all this wall of gamma that there is out there. Once that gamma goes away next week, we may get a situation where there's not as much volume, there's not as much liquidity, and there's not any gamma holding the market up. So we may see the market drift into that. Yeah, so something to be aware of, right? That trying to rationalize why the market maybe isn't selling off as aggressively as maybe it could do if that gamma wasn't there. Yeah, so that's something to keep an eye on. Yeah. What else? You've also got Tesla coming into the S&P this Friday, right? So there's going to be some flows on the back of that where passive money, passive funds are going to have to buy Tesla, and they're going to have to sell every other S&P name, basically, right? So you should see, and we've already kind of started to see this big relative value trade between Tesla going up and the S&P going down, yeah? And that is likely to kind of persist into the end of the week, basically, right? So another thing that may drive a bit of weakness in the S&P, yeah? So, obviously on the back of that correction, we have had a bit of a pop in the VIX. So if we want to have a look at the VIX chart, you can kind of see that. Maybe we look at the hourly chart here. So we had this move. VIX got to kind of 22. Last week VIX got to more like 20, and we've kind of gone from lower end of the range to up to about 25, where we were sort of last night, and now we're drifting back down to 23. Yeah, so on that VIX pop, I did start I obviously covered all my shorts on vol that I had from a few weeks back. I mentioned that I covered my shorts on vol. Now that we've had this pop back to 25 and we're going into a seasonally quiet period of Christmas, I was looking for entry points to start selling vol again. And so I started to sell a small clip of vol last night. I sold the January contract at around 26. And, I'll be a seller of spikes in vol over the next week if we do manage to get a correction in equities, basically. But I think that might be a fairly nice opportunity to make a bit of cash into the kind of year-end period where historically vol tends to drift. So we could easily see us go back to the bottom end of that range, anywhere between say 20 and 22. So if you manage to get some short vol positions on in the January contract, you can make maybe sort of 2 or 3 vols fairly sharpish out of those, I suspect. Okay, so that's kind of what I'm looking at on the VIX. DAX is another interesting one. I'd been talking about how DAX was where I was putting my kind of short expression in equities. That worked pretty well last week. We obviously rejected the top end of the range. We started to correct. We had a nice thrust lower down towards 13,000. But the bounce has been pretty violent, actually. a bit more violent than I would have expected or liked to see. Now, on that weakness down there, I did cover, my expression was long put spreads to Jan, short call spreads to Jan. I covered my call spreads when we had that weakness because they had kind of already made a lot of their money, so they weren't worth a lot. So I bought the call spread back, kept the put spreads unchanged. Obviously on the bounce here, they've obviously lost a little bit of their value. For now, I'm okay, sitting tight. If we break that higher end of the range around 13,450, then I may well bail on my put spreads as well, because then that price action on the DAX is smelling like it might want to have a bit more of a rally into the new year. Yeah, so for now the kind of correction scenario is still intact, but definitely watching the price action to see if it's worth bailing out on that scenario in equities, and particularly in the DAX where I've got a put spread on. Okay. Then if we go into FX, I suppose the first thing on FX to look at is the pound. So obviously the pound is being driven by Brexit news. Over the weekend, we had this kind of soft deadline for Sunday where they had to reach a deal by. Obviously they didn't reach a deal. Market started to get a little bit spooked and sell off. That's why you had this kind of move down to sort of 131.5. But then over the weekend, they said, all right, we're going to extend talks. We're going to go the extra mile and keep talking, basically, right? So that created a spike back to like above 134. And now we're kind of chopping around there. We did fade that spike yesterday. So that it almost gave that entire spike, or not entire spike, but it gave a lot of that spike back. But today we're rallying again because there's been some Irish foreign ministry coming out saying that they think a deal might be done this week, basically. Right. So again, optimism in here. My general sort of MO has been to sell spikes in cable because I just don't believe that the deal is going to get done. If it gets done, it's going to get done literally in the last few days of December. So I kind of fancy the risk reward of just being short this anywhere above 134, and I keep doing that. Sometimes I scalp it and buy it back. Sometimes I don't. At the moment, I did just resell it at just above 134 when it got there yesterday, and that's kind of how I continue to play it. If we get a deal, yeah, we go to 136 pretty quick. If we don't get a deal, we could be testing 128 fairly sharpish. That's kind of how I see it. Yeah, I think, okay, next thing, Bitcoin. Obviously that's been kind of calmed down a little bit, although it did have a decent move over the weekend. Bitcoin here. So yeah, it had a sell-off sort of into the end of last week. Down to lows of about 17,500. Not quite the bottom of the Bollinger Bands, but not far off. And then over the weekend, it just ramped nearly $2,000, right? Back towards the top end of the range. Now, you know, obviously this has been the most amazing asset this year. Super strong uptrend. You know, so much positive news catalyst coming about the adoption from all these sort of real money players and all these institutions. So lots of positive headlines backing this story. Yeah, you know, no reason why it can't try and take out 20,000 before sort of the new year. It may well be that when we go into that next week, which is a bit quieter and a bit sort of less liquid in general, maybe it has a little push there and tries to take out 20,000. You know, I don't see it going much above. I think once it takes out 20,000, I think 22 is probably the obvious target. So it can do a quick 10% and maybe settle around that 22,000 area. Whether it manages it in 2020 remains to be seen, but you can't rule it out, basically, right? So, but I do think, you know, by March next year, I mean, there's definitely potential for this to go a lot higher, right? So definitely watch this space, size yourself accordingly, so that if it does retest this 16,000 area, which would be an obvious place for it to retest if the correction's not over, then make sure you're not getting stopped out there, and that you've got the bullets to actually add and buy down there rather than be selling out your position. But otherwise, you know, yeah, definitely think the bull case and the trend for this stuff remains intact. Yeah. Ethereum, similar story. probably better to look at the relative chart between the two. Seems to be stabilizing the ratio here. Obviously had a big rally, corrected a bit, stabilized. But for now, I think those two are going to kind of move with each other, Ethereum and Bitcoin. You probably need some more concrete catalyst in terms of what's going on with Ethereum 2.0, what's going on in the DeFi space for Ethereum to kind of decorrelate and really outperform on the upside. But for now, I expect this ratio between Ethereum and Bitcoin to be quite stable and them to perform in a similar way for the next coming weeks. Yeah. Thanks so much for watching, guys. If you enjoyed this video, then we'd love to have you join our Macro Insight community. Just visit www.options-insight.com and sign up for your free trial to our live and interactive weekly macro call. If you haven't already done so, please subscribe to our YouTube channel. You'll find more market updates, class highlights from our summer academy, and also video tutorials on anything from options basics to market making fundamentals. You can also connect with me directly. I'm on LinkedIn, Twitter, Facebook, Instagram. You can follow me on any of those platforms. Or alternatively, feel free to send an email to inquiries@options-insight.com. Thanks.